Stick around, we're going to build this trading system in just a matter of minutes using Build Alpha. And we're going to do it using a simple indicator called IBR. So IBR is intra-bar range. It's also called internal bar strength. And this is what the formula looks like. Basically, we're taking the close minus the low over the entire range of the bar. So it's going to be a value always between 0 and 1. And the way to think about this is, if it's going to be near 1, the value, you can see then that the close is actually at the upper range of the bar. So the close is near the high. Likewise, if the IBR value is in the middle, in other words, near 0, the bar is closed in a neutral position. But if the bar closed near the low, that's going to be closer to 0. So we got 3 different ranges here. Roughly near the high, that means we are in a bullish bar. If it's in the middle, we are in a neutral zone for that bar. And if we're near the low, we are in a bear phase for that bar. Now, what we can do is create a very simple trading system with these rules. We're going to go long when the IBR is less than 0.25. What that means is it's close to 0. So we are in a pullback in the sense that that close of the bar is in the lower quarter of that bar's range. Likewise, we're going to sell when that close is in the upper quarter of its daily range. So we're going to build something for the S&P market on a daily bar. Let's go to Build Alpha, and we can do this really quick. Here we are inside of Build Alpha. Let's create our mean reversion strategy. I'm going to search for IBR, so that is the indicator we're looking for. So when the internal bar ranking is below or equal to 0.25, we're telling Build Alpha that that's going to be our entry signal and it's required. And then when the IBR is greater than 0.75, that's our exit rule. So that's it. We just coded this up. Under additional settings, you can see that I have slippage and commission set. The account size I just put to $100,000. That's really all you have to do at this point. And over here, back onto the main screen, we've selected ES over here. You can see we could come down and select any future market, ETF, or even Forex. You can see down here we have the start and stop dates. We're starting at the year 2000, going through 2024. We don't have anything else here. We have no stop loss. The fitness function is P&L. For minimum trades, the in sample we want 30, out of sample we want 30. And I'm going to actually change this to 50% for the out of sample percentage. Those don't matter too much at this point, other than we can see that the out of sample percentage is going to be 50% of our entire historical data here, which is exactly 24 years. Okay, now we're going to have Build Alpha go ahead and simulate. We can see how fast it is. And we can see here the entry rule here is the current bar is non-zero. This is just a little test for Build Alpha. It's an artifact of the code just to make sure we're dealing with positive numbers as price. And there is our IBR less than 0.25. And then the exit parameter is described here, IBR greater than 0.75. And we have the different metrics here. We can see it's generating $211,000 with $40,000 drawdown, just about 879 trades. And we could bring up the equity curve. We can see the green here is the in sample, and the lighter blue is the out of sample. That looks really solid, and how fast we built this. Again, a very simple concept. Very typical of the ES market. The ES market has a long bias, so we're going long only, and we also get the benefit of buying on some type of pullback and then selling into strength. Classic strategy that works really well with the S&P and really most of the indexes. Now we do have some drawdown here. If we go back and look at here, we can see that the drawdown is $40,000. We do have some steep drawdown. I bet we can improve that. But first what I'm going to do is going to save that to our portfolio so we can come back and reference it. Now back here at the main screen, I know that when I'm dealing with the stock index markets, I like to divide the market up into a bull regime and a bear regime. And a very simple way to do that is to use a 200 bar simple moving average. So we're going to go find that. I'm going to do SMA for a simple moving average, and here we go. And if we scroll down to the bottom, we can see that the close greater than the 200 bar simple moving average. We're going to use that as an entry as well. We're going to say, yeah, that's an entry and you must include it. And that's it. Now what we're telling Build Alpha to do is, if we come up here, let me clear out SMA and we go to show selected, we can see that our entry rules are here, IBR less than 0.25, and the closing price must be above the 200 bar moving average. So we're only taking long trades during that bull market. If it's in the bear phase, we are stepping aside. We can run that simulation. Here we get two different trading systems. Again, one of these is going to include this rule. This is an artifact of Build Alpha. But let's go ahead. Here is the equity curve on the new strategy. Looks pretty solid as well, but let's make this easier on us. Let's go ahead and add it to the portfolio and go take a look at that portfolio, and here it is. The very first one here you can see by the name of the strategy is just the initial strategy we had with the IBR indicator. The one below it is the one that contains our regime filter. Off to the right hand side we can see the equity curve of that one with the regime filter. Look at the net profit versus drawdown, 7.78, and then let's go and highlight the other one, and it's 5.19. And you can see that too here just by looking at these next to each other. So we did exactly what we wanted to do. We wanted to limit some of that drawdown, and we can see here in the drawdown, the original system was about $40,000, and the one down here with our regime filter is about $18,000. If we go look at our chart, we can go back to like these periods here when we're in a bear market. You can see no trades are taking place. That's around the 2000 panic. And then also in here in 2022, we had bear market activity where we did not trade. We zoom in here. We can also see during the financial panic, we stayed out. And likewise during this bear, this is the .com where we didn't take. We are focusing on the high probability trades, reducing those drawdowns. Now, of course, the downside is you're making less money, so you'll have to decide what to do with that. Now, who's to say that the 200 bar moving average is the best filter? This is what makes Build Alpha so powerful. Let's go back to the main panel and have Build Alpha actually test hundreds and thousands of different filters to see which is the best one. So here's the 200 bar moving average. I'm going to uncheck that. And what I'm going to do is go ahead to our legacy indicators, and I'm going to come over here and select all. So now I told Build Alpha to go ahead and consider 3,975 different indicators as our regime filter. So now we can just go ahead and press this. Well, not quite. Let's go over here. The max rules per strategy, we want to set that to 2. Why? We want Build Alpha to only consider one indicator for our regime filter. In other words, we have our mean reversion, the IBR, and we're telling it to have a max rule of 2. Well, the IBR is 1, so we're telling it to go ahead and look for one other indicator. So I'm going to press simulate and let it do its magic. All right, that took about 5 seconds, and we can see that we have a bunch of strategies up here. We can see that the name of the strategy contains the entry rules, and we can see all of them, of course, have IBR of less than 0.25, but they also have an additional filter along with them. We can organize these by net profit versus drawdown. We can see some of these up here that we have. Some of these are $240,000 in profit. Here's one that's 124. Let's take a look at this second one. Here is the equity curve. Looks pretty good. A little light maybe on the number of trades at 136. Let's go to the second one down here, and we can see that it's using a price action. The open of the current bar or the most recent bar is less than or equal to the low of the bar 2 bars ago. Where these other ones, they had a composite Hearst, and this one had a different RSI filter. This one is using a price filter. If we take a look at this one, the equity curve looks really solid. Look how fast and easy it was to do this. Another thing I like to look at is perfect profit correlation. I'm just going to organize that by the highest. So this ranks these by how straight the equity curve is. And we can see at the very top, we have a filter that is the high of the current bar is less than the EMA of the last 8 bars at the close. So that's an interesting filter as well. Let's take a look at that one. Really smooth looking equity curve and about just under 200 trades. Right below it is another price one. I think I kind of like this one better just because it does have more trades. So I'm just going to select that. So let's add that to our portfolio. Looking at the portfolio, we can see these strategies next to each other. So we can see this last one where we data mined a different type of filter, and look at that equity curve, really beautiful looking. We can see the net profit versus drawdown is at a staggering 12, and you can see quickly right here is that column and how that compares to the others. You can see the drawdown too is quite spectacular. We've gone from over $40,000 down to $13,000 with this type of filter. Of course, we're not done yet. One more thing to do is who wants to trade without a stop loss? So what we're going to do is we're going to close this results here, go back to the main window, and what we're going to do is actually enable the stop loss. And the stop loss is enabled here. We're going to go from an ATR stop of 2 all the way up to, let's make it 5 in steps of 1. So that'll test 2, 3, 4, and 5 ATR stops. Now we'll data mine again with our stop loss. Again, here's all our strategies, and we can see in the exit parameter, not only do we have exiting on our IBR signal, but we're exiting on an ATR. I'm going to come back over. I'm going to go to perfect profit correlation again. And look what bubbled up to the top again. It's that EMA. So let's select that one again. We can see the equity curve here. Wow, looks amazing. We're going to add this to our portfolio. And let's go take a look. And there we go. Here is the last one with the EMA. And we can see, yeah, we reduced our profit on this one, right? It's like from 163 down to 138. We lost a little bit of profit versus drawdown, and we cut out a number of trades. We're at about 200. But I really sped through this. I just really wanted to highlight how quickly you can take an idea and turn it into a trading system and start testing different exits. And of course, we only scratched the surface here, right? If we go back to this panel, we can test trailing stops, exiting at the lowest low or the highest high, or after a certain number of profitable closes. You could also, we didn't test different exits. Remember, we're exiting on an IBR value of 0.75. Well, why don't we data mine different exits as well? So you can see how easy it is to do. I've been really impressed with Build Alpha. And if you want to learn more, go check out the description of this video. I have more information, including how to get some free training by me on how I use Build Alpha. All right, until next time.